Today, I will introduce the history of a trust and main types of trusts in Japan from 1970 to the 1990s. In this period, fields in which trusts were used were growing. For example, the trust for savings and welfare of workers, asset management, effect land use, and asset liquidation. In 1970, the World Exposition was held in Osaka, Japan. This was the first World Exposition in Asia, representing Japan as a new big economy. President Nixon announced Dollar Defense Program in 1971. Japan adopted a floating exchange rate system in 1973. The Japanese yen continued to rise against the US dollar, and the first oil crisis began in 1973. Affected by these incidents, Japan experienced negative economic growth in 1974 for the first time since the end of World War II. However, in the late 1970s, the economy's growth rate recovered up to 4 to 5% annually, and Japan overcame the second oil crisis in 1979. Japan had become a big economy by the 1970s, and therefore, many workers became interested in improving their savings and welfare. In order to address these demands, various new types of trusts were developed. From the viewpoint of the increase in savings, the government welcomed preferential treatment for savings. With this background, the Workers' Property Accumulation Promotion Act was enacted in 1971, and the Property Accumulation Trust was provided in 1972. Property Accumulation Trust is a trust to invest money deducted from wages through loan trusts or other types of trust. As for another example, in order to promote welfare, trusts to benefit others were developed by using property management function of trusts. In 1975, tax exemption rules came to apply for donations for disabled people under the Inheritance Tax Act, and then specific disabled person support trusts were established. If creating a trust whose beneficiary is a certain type of disabled person, and the trust property is money or securities, a settlor is exempt from donation tax to a certain extent. Further, to contribute the promotion of workers' welfare and public interest, charitable trusts were started in 1977. This is an example of a pamphlet of a specific disabled person support trust. For the purpose of supporting the stable life of a person with certain types of severe disabilities, including mental disabilities, a settlor, typically relatives or donors, entrusts money or securities to a trust bank and designates such a disabled person as a beneficiary. The trust continues to provide the beneficiary, or a disabled person, with living costs and medical costs regularly for a long period of time, even after the settlor has died. Compared to gifts, this trust system has many good points in addition to preferential tax treatment. For example, the consumption and dissipation of property can be prevented. This is a permission letter to operate a charitable trust issued for the Sumitomo Trust Bank in 1975. This is the first charitable trust in Japan. The basic structure of a charitable trust is that a trust bank manages and invests property funded by individuals and companies in accordance with a certain charitable purpose, and distributes profits to many and unspecified people. Charitable purposes omitted by relevant laws include scholarships, science research grants, education development, and so on. When a charitable trust meets some conditions, tax preferential treatments are applied under tax laws. Next, the 1980s. In the 1980s, large-scale financial deregulation was promoted. By the amendment of the Foreign Exchange Act in 1980, executing capital transactions came to be basically free. Furthermore, the Banking Law Amendment in 1982 deregulated financial institutions' activities. After the Plaza Accord in 1985, while the official discount rate was reduced 4 times as a measure to tackle recession caused by the sharp appreciation of Japanese yen, more and more individual investors considered investment and asset management. Private companies also boosted investment into securities by utilizing abundant funds directly procured from market through equity finance with low interest. Since big companies actively procured funds directly from the market, demand for indirect finance fell down. In this situation, financial institutions expanded targets of loans to small and medium-sized enterprises, the real estate sector, and non-bank sectors. At the same time, real estate and non-bank sectors increased the volume of investment in real estate in domestic and abroad. Companies' needs to manage and invest surplus funds in securities was growing in the 1970s. In response to these needs, in 1980, the basic corporate tax notification was changed, and corporations were allowed to divide securities held directly by themselves and securities held through money trusts for accounting purposes. Since this change, the use of fund trust and specific investment money trust has been expanded. Further, at this time, the use of land trusts to utilize land or promote redevelopment of cities was also expanded in order to address demands of effective land use and real estate development. I'll explain these new types of trusts one by one. First, about fund trusts. These are examples of pamphlets of fund trusts issued when the service started. Usually, the main purpose of fund trusts is to invest in securities, and investment is separately managed for each respective trust. A trustee manages and invests trust property at his or her own discretion within a scope of method of investment pursuant to the trust agreement, and all of the profits and losses of investment belong to the beneficiary. When the trust is terminated, the trust property is distributed in status quo, for example, in the form of securities. Therefore, the beneficiary can continue to hold securities without uncovering unrealized losses of the securities, even after the trust is terminated. Next, specific investment money trusts. Unlike the fund trust, a trustee has no discretion in making investments. A settlor gives instructions to the trustee how to invest. In some cases, a settlor and investment management business operator conclude discretionary investment contracts, and the investment management business operator gives directions to the trustee based on the contract. When the trust is terminated, trust property is converted into cash and distributed to the beneficiary in cash. Next, land trusts. These are examples of land trust cases. The first case is NP Onarimon Building in 1984. The Otemachi Place Building is a recent case completed in 2018. Both are in Tokyo. When using a land trust, a trustee is entrusted land by a settlor, and the trustee places an order to build a building as a contractor, borrows necessary money for it, and manages the building after the completion. Sometimes, a trustee develops land for sale. In 1984, the first case of land trusts was created. Since then, the number of land trusts was growing in response to the needs of landowners to utilize land effectively. After the burst of the bubble economy in the early 1990s, many land trusts suffered from business losses due to insufficient rent income and so on, and thus new cases of land trusts were decreasing. However, land trust has remained as a useful method to address needs of effective land use. Therefore, offering and creating land trusts have been continued. The Otemachi Place, completed in 2018, as shown in the previous slide, is one of those recent cases. Let's move to the 1990s. The bursting of the bubble economy greatly and seriously affected Japan. The Nikkei stock average, which reached 38,957 yen, a record high at the end of 1989, turned to decline since the beginning of 1990 and fell below 15,000 yen in August 1992. Land value hit peaks in 1991, also fell sharply as well. The financial conditions of private sectors, including financial institutions, rapidly deteriorated due to economic stagnation and depreciation of holding assets caused by stock and land price decline. At the same time, bad loans problems held by housing finance companies were uncovered in 1995. In 1997, Sanyo Securities defaulted in the call market, Hokkaido Takushoku Bank went bankrupt, and Yamaichi Securities were compelled to voluntarily close its business. The cash flow of financial institutions continued to get worse. Long-Term Credit Bank of Japan and Nippon Credit Bank went bankrupt in 1998. The banks and companies mentioned here had led Japan's economy since the end of World War II. Together with these big banks and companies, many local banks, life insurance companies, and general insurance companies also went bankrupt after the burst of the bubble economy. Since financial institutions were reluctant to make new loans and, on the other hand, push forward debt collection, the cash flow of private companies also suffered. To improve such cash flow of private companies and to respond to needs for diverse methods of funding, trusts with a purpose to liquidate monetary claims became popular. In 1993, as for the transfer of specific claims, a simple public notice system to complete perfection requirements for third parties was newly introduced, and further, regulations lease companies have to follow when procuring funds were also set up to protect investors. As a result, the liquidation of lease and credit receivables was promoted. I will now explain the liquidation of monetary claims through use of a trust. The liquidation of monetary claims through use of a trust means that an entity, for example a company, in order to procure funds, entrusts its monetary claims to a trust bank or other financial institutions and transfers beneficiary interests to others, for example investors. In this way, a company is able to diverse ways of procurement funds, procure funds without taking into account credit of the company, and shrink its balance sheet. If a company divides beneficial interests into variety types, for example, priority and subordinated, the investor side can choose their favorite beneficiary interest considering risk and return. Monetary claims which is possible to be liquidated are lease credit receivable, bill receivable, accounts receivable, loan receivables, home mortgage receivables, and so on. A trust as a means of liquidation met needs of both fund procurement sides and investment sides, and so its use has been expanded. I would like to conclude today's lecture with a message of Professor Nomi, one of the leading trust law scholars in Japan, regarding trust as a philosophy. Professor Nomi states as follows: the basic philosophy of a trust system is trust and honesty to respond to the trust. An important point is to understand and embody this philosophy, not taking a trust as just a tool of business. Another point to be stressed is freedom and creativity. People have been trying to be free from rigid legal systems and regulations imposed by the nation. Here, the significance of a trust is to offer and to create a new system socially and economically required by those people. In order to put this philosophy into practice, it is necessary to think freely without sticking around conventional existing ideas. I hope you will learn trusts and consider how to use trusts creatively.